Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Thursday, December the 18th. And I'm starting off with Aminex, where the shares have maintained a quite bullish trajectory in the sense that there was the breakthrough, the 200-day moving average in September. And since then, we've actually remained totally above that, support coming in towards 1.5 pence. The view at the moment is that we're probably in a rising trend channel, which has its parameters, something like that, and that while we remain above, let's just say 1.5, 1.6 pence, we should head back to the top of the range as high as 3 pence over the next 1 to 2 months. If you're cautious on the shares, maybe wait for an end of day close back above the 50-day moving average of 1.95 pence. That's the sort of signal which can get rid of the sort of the dead cat bounce or the temporary rebounds, but at least above the 50-day moving average, further progress towards 2.53 pence, as I said, should be on the cards. Another oil stock which has been in focus over this week is Rose Petroleum, where it looks as though we've got basically a bear trap rebound from below, well, hopefully a bear trap rebound from below the 200-day moving average, 2.31 pence. There's also a bear trap from below, just below June support as well. The hope here is that we'll see this rising trend channel really here from April maintain itself or re-establish itself, and the shares will progress within this wide channel back up towards the best levels of the year. Once again, given that we are at sort of the risk of a dead cat bounce, the best way forward here is probably to wait for an end of day close above the 20-day moving average of 1.86 pence. We've already had the bear trap rebound from below 1.5 pence, which is a big plus, and should see the shares on their way. But normally waiting for a break of a near-term moving average is a guard against a false move or a false rebound. So this initial target 200-day line itself, 2.31 pence, and then after that, on a 1 to 2 month view, back to the best levels of the year in a move that could actually echo the break high that we saw in May and June. Last up is a stock which is also one of the sort of private investor favorites in terms of this part of the market. Very similar setup here to what we saw at Rose Petroleum with a bear trap rebound from below the 200-day moving average. Same sort of setup also in LGO Energy earlier in the week as well. 200-day line here currently at around the 0.42 level. And while we stay above that, we should be looking for at least an initial target here, November resistance of 0.6, which would be a reasonable sort of destination over the next couple of weeks. And obviously, that needs to be broken to open up a proper move back up to the best levels of the year. But one would probably want to wait to see whether the 50-day moving average at 0.6 pence is cleared, along with that November resistance, before getting too excited that solar oil was going to hit the best levels are up to 1.2 plus that we saw earlier in the autumn. That's it from me. More updates at spreadbetmagazine.com.